What's going on, guys? Mike, aka Crypto Jewels. I'm going to go over Bitcoin. Today has been a uh, bloody mess, if you want to call it that, for Bitcoin and quite a bit of alts just for crypto in general. So, as always, everybody always says Bitcoin determines the market. And I believe that to a certain extent. However, I'm more of the opinion that Bitcoin cycle is no different than any other cycle in the crypto world, and they all follow the same cycles. But Bitcoin was the first one, so they're basically all just following a cyclical nature of Bitcoin for the most part. So, Bitcoin sometimes will drag the market down, or at least it seems that way because it's the one moving first, or all sorts of narratives you can put in play. But ultimately, I think these assets are predictable to a certain extent. Now, obviously, with that being said, anybody can be wrong. I don't have a crystal ball. I'm not a genie in a bottle. So I'm just doing this based off of, the things that I've learned from a technical analysis standpoint. And, I seem to get things right more often than not, but that is what it is. You guys can make up your own minds on that. So I'm not a financial advisor. I do this for entertainment and educational purposes only. Let's dive into Bitcoin here. So I'm going to get into a few different things on Bitcoin today. I'm going to look at the Elliott wave structure, and then I'm also just going to kind of look at price action in general, just a little bit, just to give me some confluence on how I'm viewing this. So the way I trade markets, guys, when I'm looking for an entry and an exit, I'm going to be aggressive. So I'm going to look at my first, option that I see, my first scenario that I see, and I'm going to buy at that point. And if it gets invalidated, then I will move on to my second scenario. So currently I see several different scenarios unfolding, but I'm just going to go over my first scenario, which happens to be the most bullish, I guess, if you want to call it that, because it's got the downside on it is not as deep as the other scenarios. So first off, guys, I see this price action. I'm going to assume that something similar to this price action here, from the last, current dump from old all-time high back in April down to where it reversed in July. I'm viewing this structure fairly similar as far as how I think this thing's going to react. So as of right now, as you see, you've got a bullish divergence here on your RSI, your pricing indicator, your price is going lower. However, your RSI oscillator is going higher, creating a bullish divergence. I believe we'll see something similar here. I'm not saying this will not, correct below that at this point. I'm not entirely sure, but it's something I'm keeping my eye on. So even if this thing does continue to, get lower in price, I would like to see the oscillator start to move upwards, creating a bullish divergence. That would certainly solidify my case and make me more confident and comfortable when I do decide to, ape back into the crypto markets as a whole. So that's my kind of price action scenario, what I'm looking at. Now let's dive into Elliott wave structure. So as of right now, guys, I am viewing this as basically our 3 up here. So you got 5 subwaves. If you're not familiar with Elliott wave, you got 5 wave move in the direction of the trend. This being our 3rd wave, meaning we'll have a 4th wave correction, and then one final 5th wave push up in the direction of the trend, which is macro bullish in my opinion. So basically the way I see this is our 3rd topped out here in April. We had an ABC creating a W, an ABC creating your X, and ABC creating your Y. So this is a 3-wave, a 3-subwave A structure. So I see this as a 3, and then an ABC to create your B. So a 3, 3, and now I believe we will have a 5-wave C structure down. That's the way I'm viewing this right now. So this entire structure here, guys, is called a corrective structure in Elliott wave. Corrective waves are basically 2-wave, 4-wave, and then after that you have, you know, your one. Once you have a 1, 2, 3, 4, 5, you'll have a corrective structure, or you'll have a reversal, one of the two. So this is a corrective structure. This could turn into really one of 3 patterns. This could be a running flat, which would be what I am going at first, and assuming that we are going to be in a running flat. This could be a regular flat, meaning that price action will come down basically down to here and create roughly a double bottom, or it could be an expanded flat, which ultimately would look like you know, an ABC zigzag where price moves past this bottom here at 29,000, you know, down to say 20 grand, somewhere around there. So those are the 3 different flat structures that this thing could possibly be. Again, I am assuming that this will be a running flat, meaning that it will be, price will stop anywhere from, as you can see, from a fib standpoint, 618 to 786 of wave A and B. That is where a running flat typically will correct down to. Doesn't mean it has to, doesn't mean it can't go a little deeper, but that's just kind of a general guideline from an Elliott wave standpoint of where this C wave structure could go down into. So to zoom in a little bit more, here's how I'm viewing this count currently. You've got your, like I said, you've got your B up here, which was from your A, your B, and then a final C way down to create your 4. I've got this as a 1, 2, 3, 4, and then I've got my 5 down here, you know, potentially from 37,000 up to 42,000. And then I've got my sub micro count of my 5th and final wave like this: 1, 2, 3, 4, and then you'll have a sub micro count of your 5th, your final sub micro 5th wave to create your micro 5 here of your C. So let's get in a little closer to that to see it. So again, you've got your 1, 2, your orange, 1, 2, 3, 4, 5 potentially coming all the way down here. You got your sub micro of your wave 5 count, 1, 2, 3, 4, and I believe we are on a 1, 2, 3, 4, 5 to finish our 5 of 5. So ultimately, I see the price, if this count is correct, guys, I see this price going down from 37 to 41,000. I did have a video yesterday that showed this basically as being a 5, and I had mentioned that I had a count where this is a 3, and you know, yesterday when I posted that, we ended up crashing and dumping, so we did not get to this, basically this point here, this 51,954. I would like to see that basically zone, that price. I would like price to conquer and trade above 51.9 in order for this count to basically be invalidated. So until our price is above 52,000 bucks, I will believe that we will still have more downside. And if not downside, at least we'll have, you know, you could have a truncated 5th here, you know, finishing the entire structure. That's possible, but I still believe that this entire area will be, you know, an accumulation zone, probably an area of pain for a lot of people. A lot of people will probably try to trade this, whether it be, you know, shorting it or longing it. And this thing's just going to royally screw some people up and chop a whole lot of people up. And I will not be one of those people. I will wait for this thing to decide what it's going to do and where it's going to bottom. And then I will look for signs of reversal. You know, from an Elliott wave standpoint, look for it to become impulsive again. And then from a price action standpoint, I will look for divergences. So I will couple those two things together to determine ultimately when I think this thing is going to be bullish again and start our next 5th wave up, which will be our final 5th wave before the ultimate bear market, which we will have regardless of what anybody thinks. There will be a bear market. hopefully that helps you guys. See ya.